Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have David Mann, head of ETF product and capital markets at Franklin Templeton, as well as Anujeet Sareen, portfolio manager at Brandywine Global, to discuss how investors should look at active management for their fixed income ETF investments. It is great to have you both with us. Welcome to Trade Talks. And Anujeet, I'm going to start with you. At this point in the market cycle, how should investors look at investing in fixed income, and what should they keep in mind in the U.S. fixed income market specifically?
Well, thanks, Jill, for having us here. It's great to be here. Well, I think the first place to start is just to recognize that there's a lot that's changed in the last 2 years, right? The last year, 2022, was the worst performing bond market we've seen in over 150 years. Yields, of course, now are quite a bit higher than they were back in 21. We've gone from near zero rates on treasuries to north of 4% today. And we think that actually leaves treasuries and bonds at a point here that they make a lot more sense now for portfolios. Inflation this time last year was close to 9. They're now closer to 3. And so bonds actually compensate you for inflation risk today. That's a big change. And so we think they make a lot more sense for asset allocations in people's portfolios. And
recently, Franklin Templeton launched Brandywine Global's first fixed income ETF on Nasdaq, the Brandywine Global U.S. Fixed Income ETF, ticker USFI. Anujeet, you're one of the portfolio managers. Tell us about USFI's strategy and your unique approach to the U.S. fixed income market.
Sure. So USFI is an ETF that invests in U.S. dollar-denominated bonds. So government bonds, corporate bonds, and mortgage and asset-backed securities. These are all high-quality securities. Everything is above investment grade. There are no junk bonds in the portfolio. The strategy is really based on two main approaches. And the first, the most important and distinctive to who we are. We're a macro top-down value shop. And the reason we start there is that we're really focused on what are the dials that if you turn make the biggest difference in a fixed income portfolio. That's interest rate risk, that's sector allocation. Do you own corporate bonds that are riskier, or do you own treasuries that are safer? Those are the main decisions that we think make the biggest impact, and that's why we're macro. The second part is that once you make those macro decisions, you still got to buy the right bonds, right? You still got to pick the right corporate bonds. So that bottom-up fundamental analysis is important. But I'd really emphasize it's that first piece that makes us distinctive. And if you just look back over the last few years, the volatility we've had on inflation, on growth, on the Federal Reserve, that perspective, right, really is how you make the biggest impact, we think, for fixed income investors.
David, how would an investor use USFI in their portfolio?
Yes, sir. So as you pointed out, now that you can start getting some real yield from fixed income exposure, we're having a lot of conversations about positioning a core holding, especially those who are benchmarked to the ag, where we think this would fit in nicely. One of the debates we have from an ETF perspective is, okay, tell me about what the active manager is doing different than just getting a broad passive exposure to the ag, for example. And as you pointed out, having that macro view to be able to toggle between treasuries and credit, we just think that's so much more powerful to get that core exposure than just saying, okay, well, we should be 40% treasuries and 10% mortgages, et cetera, that we just think it makes a ton of sense for investors.
And David, Franklin Templeton's fixed income ETFs are actively managed, including USFI. Why should investors look for active management in the fixed income space?
Yeah, so we really think, just to once again, sort of repeat what you said, that just the fact that having an active manager that can have an opinion about the macro environment, to understand why we want a certain exposure at a certain time, we think that really lends to fixed income exposure in active management. We're very encouraged by the flows that we've seen in the industry this year. About a quarter of all ETF flows have been into active management. So we think now that we've come out of the ETF rule, investors getting more appreciation of active management within ETFs. We think this is a time for active fixed income managers to shine.
All right, David, Anujeet, thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.